I'm joined live from Sydney by Rob Henderson, Chief Economist at National Australia Bank. Rob, thanks very much for joining us.
Good morning, Mark.
Rob, do today's unemployment figures, do they mean that another interest rate increase is not too far away?
Well, look, I guess, Mark, at first blush you might think that, but my reading of these numbers is that they're actually positive news for the Reserve Bank. And that's because you might have also noticed that the unemployment rate rose from 5.3 to 5.4%. That was unexpected. And initially it appeared that was because of an increase in the participation rate. But when we dug deeper into the numbers, it turns out that Australia's population is growing so fast now that we need about 27 to 29,000 extra jobs per month just to soak up the increase in the population. So what's happened here is that we've seen strong labour demand, but it hasn't been enough to keep up with the rise in the workforce, and that's led to a rise in the unemployment rate. So we put out a note this morning saying, Mark, that this is a beautiful set of numbers for the Reserve Bank. It's exactly the sort of supply response that'll keep wages inflation in check.
So does that mean the RBA doesn't need to raise rates for the time being?
Well, to us, there's nothing in this report that says to them that they need to be in a hurry to increase interest rates. Now, when the Reserve Bank met last week and increased interest rates again to 4.5%, it seemed to us that they were giving maybe rather guarded, but nevertheless a signal to the market that rates were going to be on hold for a while. Well, on our analysis of these labour market numbers, certainly they can afford to stay on hold for a while and watch to see what develops here. Now, obviously, the dislocation in financial markets over the past week or so and the turbulence and uncertainty ahead might keep them on hold at the next meeting anyway. But, you know, this is fairly good news that the population is growing and therefore not necessarily will the strong labour demand show up in higher wages pressures, Mark.
What is the contagion threat? You talk about the dislocation, Rob, in financial markets recently. What is the contagion threat from Europe's debt crisis to Australia?
Well, the Australian banks are actually in a very good position at the moment. And of course, I work for one, but Australia has four major banks in our economy, and they've really underpinned the strength that we've seen in the past 12 months. And that's because they've had very limited exposure to the problems of the banks in Europe and America. That's meant that their capital bases haven't been eroded. But they did see, Mark, a big increase in funding costs, of course, when investors' flows or investment flows to the banks dried up in Europe and America. Same thing happened in Australia. So that's one mechanism through higher cost of funds for the banks. Another one would be a global slowdown, which reduced demand for Australia's exports. And the third one comes from business and consumer confidence. So if business and consumer confidence falls because of the market disruption, that could slow the economy down. But this morning, one of our Reserve bankers gave a speech and he spent a fair bit of time talking about the problems in Europe, but he did say that our part of the world's still growing strongly. So I think unless we see a return of the turbulence, at the moment they're kind of putting that aside and just watching what happens, Mark.
So in 30 seconds, Rob, I mean, in short, Australia looks to be in a much better shape economically than many of its main global counterparts.
I think that's true, particularly in relation to other advanced or industrialised economies, Mark. Australia's unemployment rate is falling. We've seen the RBA, as you said, increasing interest rate. GDP's forecast to move to 4%. Our fiscal position's pretty good, so we are in a good position here. But we are fairly tied to Asia. So a downturn in China wouldn't be good for Australia, and that's something we're watching carefully as China tightens policy, Mark.
Rob, thanks very much indeed. We'll speak to you soon. Rob Henderson there, Chief Economist Markets at National Australia Bank.